Hi there, welcome to Grain TV. I'm Kevin McNew. It's Monday, October 24th, a mixed day in the markets. Let's take a look at Grain Edge's trading platform and see where we closed. In Chicago, corn losing 3 3/4, beans in Chicago losing 11, and beans was up 7 3/4, almost getting up to the $10 mark, but closing around $9.90. News out today was pretty light. There was some activity again in palm oil. Sunday night palm oil markets were up sharply, gaining 3.5%. That got bean oil going and carried beans along up for the ride, with beans in Chicago going as high as $9.99 in the overnight session. But we weren't able to hold those levels, making a few bold attempts at them in the day session, but managed to close around $9.90. Other news out, the weekend looked really good in terms of weather and harvest progress. Traders are looking for about a 75% level of harvest for beans and about 60 to 64% for corn. We'll see those numbers out later today. Other than that, we really just had weekly export inspections to grind our teeth on, and those numbers were very, very poor for corn and wheat. Both corn and wheat coming in well below expectations. Corn at 541,000 metric tons versus expectations that range from 900 to 1100,000 metric tons. Meanwhile, wheat coming in at a dismal 244,000. But conversely, as bad as they were, beans was just as good, coming in at 2.7 million metric tons, well above even the high end of expectations at 2.5. So overall, the bean market continues to be buoyed by very, very strong exports. The strength in palm oil that started last week and has carried through into this week. But there are some hints that we may need to move lower. And part of that is as we get closer to first notice day on the November contract, we're going to start to see convergence issues between cash and futures market. And the cash market today, in particular along these river terminals that are delivery points for the CME, got very hard hit in terms of basis levels. Basis levels were off 10 to 20 cents along many of these key river terminals going into today. So that is certainly problematic. As we look at delivery basis levels as we get close to first notice day here, what we tend to see as we get to first notice day is basis levels at these 25 delivery facilities ranging between about -10 to +5 depending on the year. So if we go back 5 years of history, these different lines show the convergence in those 5 years. Here's where we are today, 2016, at around -35. That's well off the -10 to +5 range that we normally are when we get to first notice day. So with 1 week left, Monday of next week being first notice day, I think we got a lot of ground to cover up, and my guess is that futures is going to have to come down, because certainly the cash market is saying we have plenty of beans, we are driving this thing down. And today was, a good example of that, with the futures trading sharply higher for much of the day. The cash market just completely obliterated it, giving up more than the futures gain. So watch for that as we go forward in the coming week. Looking at the action in soybeans, turning to the Grain Edge trading platform, the 30-minute bar chart starting on Sunday. It was a pretty quiet open with no real big fireworks, but as the trade got going and we got into the Asian markets, we saw palm oil really start to climb higher again, managing a 3.4% rally at one point during the overnight session, and that carried beans sharply higher again, getting almost to $10, getting as high as $9.99 before backing off into the morning break. But coming back from the morning break, we took one last stab at $9.99 before falling sharply lower, and you can see within a 1 hour period we gave up pretty much all of that rally overnight. But we ground higher as we got past that initial flurry of activity, trying to get back to the 997, 998 mark before really just giving it up in the last 30 minutes of trade, losing 8 cents in the last 30 minutes. So again, this is a market that seems to be struggling as it gets up to these higher levels, finding very steep selling as we get up into those high 990 marks and get close to $10. Like I said, I wouldn't be surprised to see the market start to back off here, especially with river terminal basis levels that are the CME delivery points really starting to come under pressure here. So watch for that in the coming week. First notice day a week from now. We'll be talking about that more as we move forward. That's all we've got for today on Grain TV. As always, if you'd like to learn more about how we can help you in your own grain marketing situation, including cash markets from over 4,000 markets every day, visit us online at grainhedge.com and take a free demo of our trading account. As a GrainEdge trading client, you'll get our technical alerts email first thing every trading day. Technical Alerts is a powerful system that generates quality trading opportunities. Each trading opportunity shows a chart and analysis providing clear price targets and risk potential. Technical Alerts look at historical chart formations and compare the current environment to the past to form concrete trading recommendations. The commodities covered by Technical Alerts includes grains, livestock, crude oil, currencies, bonds, and metals. Start your trading day with the most powerful insight into market direction and improve your trading today. Sign up at grainhedge.com to become a client.